Welcome to my weekly market roundup, 30th December 2020. I'm Sagar Nandi, retired IT professional, now swing trading stocks using Q systems and techniques that I develop. You may contact me using my email ID tradingprofitably@gmail.com. I regularly share live market and stock analysis on my website, YouTube channel, and Twitter page. You are most welcome to make use of them. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. These are the systems I use in my real life trading, and these are the same systems I am going to use today to look at the market. That was the last slide of the presentation. I'll start with the live system. Starting with global market analysis. For global market analysis, I use Q Global running on Metastock, and I am looking at the instruments using the standard weekly, daily at a glance template. Starting with Australian Index AXJO. AXJO displayed a series of bearish headwind signals. Looking at that, I wouldn't take new long positions. At the same time, it has trendline support. Looking at that, I will not take any short position as well. The weekly is showing a series of candles that are indecisive with upper tails and lower tails. That is another reason to stay away from the Australian market right now. Japanese market index topics. Yesterday, topics broke out of the watermark resistance and it came very close to the upper boundary level. I am not fond of breakout trades, therefore I would not take any long trade yesterday. Breakout traders could look for long trades, but I am not a breakout trader. The weekly is showing indecision. That is another reason that even breakout traders might stay away from taking a long position in topics yesterday. Today, that is Wednesday, Japanese market is already closed. Today there is an inside bar. There is no trade setup on topics right now using Q standard trade setups. Chinese market index CSI 300. CSI 300 broke out of the watermark resistance today. Japanese market broke out yesterday and CSI 300 broke out today. The weekly is also bullish. Among the three global markets we saw so far, CSI 300 is the most bullish when we look at the weekly candle color shape and also today's candle color and shape. There is no Q trade setup, however it is the most bullish of these three markets. What about UK market FTSE index? This is similar to Australian market. The weekly has indecisive candles with upper and lower tails. The daily is moving inside a range. It has bearish headwind, watermark created by that. Price could not break above that. and it has trend line support, similar to the Australian market. Yesterday's candle had an upper tail, mixed shape overall, hollow body upper tail, that is a mixed shape. Today's market is not closed yet. So far it is a narrow body candle. Weekly is showing that it is neither bullish nor bearish, indecision. And Indian market was the strongest one for many weeks among the global markets, and that is certainly continuing. Certainly continuing to many people's amazement. This week's candle is bullish, today's candle is again bullish. It is overbought, extended above the upper boundary, but it is certainly bullish. That is a view on the global markets. Either they are bullish or for some of them they are moving sideways after being in an uptrend. None of them are bearish. Let's look at the USA market, and for that I am going to use Q Elite running on TradeStation. Let's look at the market ETFs. Let's look at DIA. Start with DIA. DIA was one of the weaker market ETFs. The relative performance is showing that the weekly candles are showing that it is moving in a narrow range. This week's candle color is yellow, shape is not bullish. It may be bearish, not bullish shape. And the daily chart is showing it is still in an uptrend. However, could not break above the watermark resistance. Yesterday, not yesterday, 2 days ago it failed, and yesterday it failed again. However, I can see today in the overnight market it is up. The last price is 304.55. That is just above this watermark resistance. We'll have to see if price can break out of the watermark resistance today. Looking at yesterday's close, I am not going to buy, neither am I going to short DIA. Small cap ETF, Russell 2000, this was the strongest one just a while ago for a number of weeks. Last 2 days it is not so strong. 2 days ago it had a gap up open, then it sharply fell down, closed near the low of the day, and yesterday it opened near previous day's close and sharply closed lower, closed below the trend line support. The weekly color is neutral. It broke below the trend line support. Therefore, if I had a long position in IWM, then I would protect profit with stop loss, trailing stop loss. However, there is no short trade setup. Overnight market is showing a gain for IWM also. We'll have to see if today price can regain the trend line support. It became the weakest market ETF over last 2 days. However, it is in a clear uptrend. Just 2 days move doesn't mean that it became bearish, and I'm not going to short IWM now. Neither am I going to buy as well. We can see in the overnight market, DIA, IWM both are up. Let's look at Nasdaq 100, and for that I'm using the futures. Because I'm using the futures, the last candle in the daily chart will be the overnight market candle that is up. Weekly is in a clear uptrend and daily has multiple trend line supports. As I repeatedly mentioned, until these supports are broken, I'm not going to take many short trades. I did share a short trade idea, I think yesterday, that was based on Monday's close. Yesterday I shared it right after market open, but the analysis was done based on Monday's close, if I'm not mixing up the days. Because I'm in a different time zone, sometimes I mix up the days. We'll have a look at that sharing. That was a bearish idea I shared. However, looking at these trend line supports in Nasdaq, and we'll see it is there in S&P 500 also, I am not going to take many short trades. And it is extended, so I'm not going to look for many longs either. I will rather wait for a pullback. And also this is the second week in a row where we have shortened trading week. Not all the 5 days are trading days. Volume is also less. So I am going to enjoy my year end and not take many trades. I already have some positions, and most of them are on the long side. I have some hedges using market ETFs, hedges against the long positions. They are using options. And I have a few, maybe one or two short positions, including the one that I shared yesterday. The market is of course bullish. As we saw so far from DIA, IWM, Nasdaq 100, and if we look at S&P 500, let's look at the futures again, ES. In an uptrend in the weekly, has multiple trend line support in the daily, in an uptrend in daily of course. Unless these supports are broken, I am not going to take many short trades. It is extended, so I am not taking many long trades either. The futures and market ETFs both are bullish. Global market is also either bullish or moving sideways after being in an uptrend. Isn't it amazing how the market keeps on going up, especially the USA market and Indian market? If I look at the mega cap stocks, mega cap top 20, the custom index for the USA market, for a long time in the daily chart, it was bound by trendline support and a trendline resistance. Now the trendline resistance is gone. It is not there anymore. That means it could break above that trendline resistance. I think 2 days ago it could break out of that. However, it is still near the watermark resistances. It is still moving inside a range, but still we have to acknowledge that the trendline resistance is broken, and that break was associated with the relative performance going up after a long time. For a long time, the mega caps were underperforming the market, shown by the relative performance tilting down. But last 2 days, it went up. It outperformed the market. Does it mean I'm going to take new long positions in mega caps? No, because if I look at the major mega cap tech stocks, the FANG stocks or extended FANG stocks, none of them are giving a Q trade setup. So I'm not so comfortable buying any of the mega caps right now. The mega cap top 20 custom index is showing range bound move. What about market internals? Let's look at that. Composite indices. This is composite indices and market internal study using the Nasdaq composite and NYSE composite and studying the internals for both of them, new high low, advanced decline, up down volume, in addition to the Q thrust and jump indicators. The composites themselves are bullish. NYSE has a trend line support, and these are both weekly charts. NYSE composite, not S&P 500, but the broad NYSE composite has a support in the weekly chart. But if you look at the candles for 1, 2, 3, 4, 5 weeks in a row, it is not going up. It is not falling down. It is moving sideways. Extremely narrow range. Unlike S&P 500 ETF or futures, those were in a better uptrend. This is in an uptrend in the weekly chart if you look at the trend line support. But if we look at the candles for last 5 weeks, it is moving in an extremely narrow range, showing that the overall market is strong, bullish, but not as strong as S&P 500. On the other hand, Nasdaq Composite is not moving sideways. So Nasdaq Composite, the whole Nasdaq as a whole, is stronger than NYSE as a whole. If we look at new high low, no sign of bearishness. If we look at advanced decline, Nasdaq is showing some weakness in the weekly chart, and weekly is the appropriate interval if you are using Q techniques to study the internals. It is showing some weakness. Though new high low is very bullish, advanced decline is not showing that bullishness. What does it mean? That means under the hood, it is not as strong as it is appearing from the composite itself or from stocks making new highs or Nasdaq 100 making new highs. That is not in sync with the advanced decline tilting down. Up-down volume doesn't show any weakness though. For NYSE, advanced decline is weakening but not as much as Nasdaq. Whereas up-down volume of NYSE is weaker than Nasdaq. That is showing some interesting and somewhat confusing picture, you may say, because when we look at the composite itself, then NYSE is moving sideways for 5 weeks, not a short time. 5 weeks is a long time, more than a month, and Nasdaq is actually in an uptrend. But if we look at advanced decline, Nasdaq is weaker than NYSE. Both are showing some divergence, but Nasdaq is weaker. For up-down volume, NYSE is weaker. So we may keep an eye to see if the advanced decline weakness leads to a pullback in the market. But we will not consider taking any short trade unless this composite trend line support in NYSE is broken. And if that breaks, probably the S&P 500 futures and Nasdaq futures trendline support will also break at the same time. There is no sign of bearishness. Maybe moving sideways, that what we can see from NYSE, but no sign of bearishness from this market internal studies as well. ETFs, futures, market internals, everything are bullish. Now let's look at Q edge. Let's look at the let me go back to home. Let's look at the 1 month to 1 day advanced decline across sectors, industries and stocks. That is this from 1 month to 1 day. 1 month for sectors, industries, stocks bullish undoubtedly. Over 10 days bullish, no doubt. Over 5 days also bullish. However, over 2 days and yesterday it is bearish. Yesterday being the most bearish. 100% of sectors were down, 91% of industries and 82% of stocks were down. that is showing some weakness over 1 day and 2 days. And we saw over these 2 days, Russell 2000 ETF IWM dropped. The other market ETFs might have also weakened, but not as much as the Russell 2000. And even the Russell 2000 didn't give a short setup. Therefore, even though there is some weakness over last 2 days, I am not expecting many short setups in individual stocks as well. There might have been a pullback in some of the stocks, but not many short setups are there probably. And many short setups probably will not come until the memory trend line supports are broken in market futures, market ETFs, and market composites. If we look at Finder, another way of looking at the market using the balance between bulls and bears, first looking at the weekly chart as of Tuesday's market close, all signals overall 61% bearish, trend continuation 70% bearish, reversal signals 84% bearish, only strength signals are bullish very much 93%, and we know the reason because of a very large number of gap ups on Monday's open. After that, price reversed, in fact, shown by large number of reversal signals, and overall also this week so far till Tuesday's close is bearish. Now if we look at yesterday's Finder, the balance between bulls and bears, yesterday that is bearish. So yesterday was a bearish day. 82% of all signals, 65% of strength signals, 86% of trend continuation, and 81% of reversal signals are bearish. The stock that I shared as a bearish candidate, how did I find it? I was looking at the number of bearish headwinds in the weekly chart. I keep an eye on the headwind reversal signal. When many of them appear together, that makes me cautious. So I wanted to look at the stocks that were giving bearish headwinds. So let's do that. These are the stocks having some kind of bearish signal in the weekly interval. I wanted to focus on the stocks giving headwind signal, 45 stocks. So I'm going to flag them. The stock that I found as a possible shorting candidate is from this list. What was that stock? Let's look at the forum. This is the latest post. Let's look at that. 1 day ago, yesterday I shared it. Soon after market open, 9:48 a.m. New York time, and the analysis was based on Monday's close. This was the stock Sensata Technology. On weekly Q Finder, it gave a bearish headwind signal, and it also touched trendline resistance. Symbol is ST. Let's go back to Finder. Let's look for ST. ST. It still has the bearish headwind and trendline resistance touch signal, and it is at price extreme high even in the weekly chart. Those are lucrative shorting points. This is what I saw. I identified the stock first from weekly headwind signals. What did I do? Again, I looked at the overall picture first, and I saw a large number of reversal signals overall. Now it is 84%. On that day, it might have been different. In any case, I saw large number of headwind signals. Whenever I see large number of headwind reversal signals, I am cautious. So I went to the bearish weekly stocks and focused on the stocks giving headwind signal. Sensata Technology was one of them. Ticker was ST. I carried out a fundamental analysis of that stock using Q Vital. This is connecting with Reuters and calculating fundamentals and scorecard and peer analysis. While it's doing that, let's check the industry. The industry is electrical components and equipment. And I looked up the industry strength from Q Edge, and instantly from the color coding, you can see that its core used to be bullish earlier. The color was bullish and now it is bearish. The pace columns are showing deceleration. So the industry is telling not to buy into the industry right now. I could look for shorts. And I am interested in shorting this stock. Why? Because it displayed weekly bearish headwind. But before deciding to short finally, I would have to complete the Q360 degrees analysis, and I did that. Let's look at the posts. I found it from Finder, and on the day I shared it, 29th December, soon after market open, the industry was weak at that time also, with deceleration allowed me to short. Looked at the fundamental scorecard over 2 days, 1 day, and in real time it was continuously going down. Good valuation but negative earnings growth for 3 quarters. Negative revenue growth also for 3 quarters. So fundamental was weak in terms of growth, and that allowed me to short the stock. Then I looked at the chart, and it is important to look at the chart at the time I did the analysis, not after the fact. What was my starting point? In this case, it was the bearish headwind signal in the weekly interval that I identified from Finder, and also the fact that it was touching the trendline resistance. And in the daily also, it was reversing from the trendline resistance. So on Monday itself, I could be ready to short. However, the candle color was green. I could still think of shorting, but I would prefer the candle color to be yellow, maybe red, but red is not expected when it is going up and hitting trendline resistance and reversing immediately. It may or may not turn to red color. In this case, it didn't. So I waited for next day's open and make sure that price was continuing to go down. And of course, I looked at the fine-tune chart to make sure it was going down below previous day's low, and using fine-tune chart I took a short trade. My stop is very narrow, just above the trendline resistance in daily, and I could put my initial target as the trendline support below. However, I may not wait for price to go down so much before booking some trade. As soon as my resistance is covered, which will be somewhere here or even slightly above that, I'm going to book at least a partial profit. Now, if I see that the market is rolling over and going down, then I probably will not book profit once the resistance is covered. In that case, I will wait for price to come to the trendline support. But as we saw in the overnight market, the futures are up. If market doesn't come down, then I would like to book profit, at least partial profit, once the resistance is covered. This is one stock that I found as a shorting candidate at price extreme low, both in weekly and daily. It is overbought also for a number of days. This is what I shared yesterday, soon after market open. Let's see how it closed. ST. I am using Q Elite now. You could use Q Global also. I initiated the short near the opening price, and after that price came down. So I have a small profit in the trade. The relative performance is tilting down. That is good for me. And yesterday when I shared the post, it didn't have a bear release signal. You can see at the market close, it has the bear release signal. So far it is working all right as I expected. Now, one thing I have noticed that many people write to me and saying that was a great trade because it made a good profit. But I have an alternative view. To me, ST is a great trade not because it is going to make profit, but because I did my homework before placing the trade. Whether it is topped out or it hits my profit target is not a factor that I consider to say it is a great trade or not. To me, it is a great trade because at the time of placing the trade, I did my homework. I aligned the forces from multiple levels. I managed my risk and I placed the trade perfectly just after market open using fine-tuned chart. I didn't second guess. So it is a great trade. Whether it is going to make loss or profit doesn't matter. And my experience is when you take trades with discipline like this or using whatever other technique, robust technique and system that you are using, so long as you keep on taking great trades, you don't have to worry about whether a particular trade is making profit or a particular trade is making loss. That means we focus in Q technique on the inputs. The outputs take care. Outputs is profit, input is discipline, technique and systems. Once we take care of the inputs, what are them? They are systems, Q systems in my case. Technique, what is the technique? The trade setups with unambiguous checklists that I use. And risk management. Once I take care of the input with discipline, the output, that is profit, is supposed to take care of itself. So ST is a great trade for me. This was a short idea that I shared, though the market is still bullish. I did that looking at the weekly bearish headwind and the trendline resistance in both weekly daily. As you know, my preferred instrument would have been shorting the call instead of shorting the stock in this case. However, this particular stock ST doesn't have liquid enough options, so I couldn't take the position with short call vertical. I initiated it with stock itself. Let's go back to Finder. Weekly is showing some weakness. Daily, yesterday was of course bearish, but we saw overall the market internals are not showing any weakness. The market ETFs futures are not showing any weakness. One more thing I would like to do, I would like to share another view of the market internals with daily chart. Earlier I mentioned that no significant down move has happened in the market without advanced decline and up down volume for both Nasdaq and NYSE coming down sharply, and that coming down sharply is indicated by vertical lines. But if you look back, NYSE doesn't have vertical line that is hitting the thresholds, lower thresholds for both advance and decline for a long time. The last time it happened in the daily chart was here. Both up down volume and advance decline came down. Last time it was here, that was near end of October during this pullback. Since end of October, November, December, for 2 months, we didn't have a single day in NYSE where both up down volume and advanced decline hit the lower threshold. And if those thresholds are hit in this particular chart, a down arrow would have come, like it came here and here. But if you look back, there is no such down arrow on the chart for many days. And if we look in the Nasdaq composite, there is no down arrow for a long time. The up arrows were also some time ago. And if we again look at the composites daily chart here now, composites have trend line support also, just like S&P 500 futures, Nasdaq futures. There is a bearish headwind in Nasdaq Composite daily chart, but unless the trendline support is broken, we are not going to worry too much. Also, unless there is a down arrow on the chart, which will be when there is a vertical line in up down volume and advanced decline both, and unless that comes in Nasdaq and NYSE together. In the past, no significant market drop has happened unless that has come. That has not come even yesterday. Though Q Finder is showing some weakness, Russell 2000 is showing some weakness, the internals yesterday, when we go and look at it with a microscope like I did just now, there is nothing that is telling that we can keep on taking short trades and make great profit from that. Market is extended, market is bullish, market is low volume, thin. Not a time to trade probably. Let's look at the mega caps. Earlier I showed from the custom index that mega caps outperform the market over last 2 days. But is there a trade setup? Let's look at the mega cap tech stocks, extended FANG stocks. Netflix nicely bounced up from the trend line support in daily. Therefore, if you watched it on Monday, when it hit the trend line support, precisely at that time you could take a long trade, probably using short put vertical, and you would have a good profit by now. But if we use the swing trade setups, then we don't have any trade setup. Yesterday there was a bullish flow candle, however it had an upper tail, so we wouldn't initiate a long trade in Netflix at the close. It is in an uptrend, but no trade setup is there. Amazon is inside a range formed by support memory and resistance memory, both in daily and weekly. When it is inside a range, we are not going to take a trade when price is in the middle. Instead, if it comes to the upper end of the range and comes down, we may look for a short, like I did in ST. ST was in an uptrend though. In a range bound stock also, we could try to short at the upper end of the range or buy at the lower end of the range. Right now we have no trade setup. Tesla has a trend line support but no trade setup. Weekly and daily, both colors are neutral. There were multiple bearish headwinds earlier. It has not broken above the watermark resistance, but even if it does, it will be too extended, so I wouldn't chase that. And it has trend line support, so I'm not going to short. No trade setup in Tesla. Facebook, again inside a range. Looking at that, a Q trader, even when on Monday it shoot up, looking at the range bound move, one wouldn't take a trade. Q traders, if we are following technique, Q technique, we wouldn't take a long trade in Facebook even looking at the Monday's up move because it is range bound. Microsoft I will look at last. Let's look at Google. Again, inside a range. Weekly is bearish. In any case, daily is inside a range, so I'm not going to take any long or short trade. Apple is in an uptrend. It's not in a range, but it is extended. Yesterday had a bearish shape candle, neutral color, and it had a bear release signal. On Monday, it had a bullish move. However, it was already above the upper boundary, so I was not going to take a long trade. This is bullish, but no long trade setup, and in weekly it is creating a bearish shape candle and a false upside breakout probably. So far it is looking like that at the long-term watermark resistance. That's why I would not, another reason why I wouldn't buy Apple on Monday in spite of the bullish move would be because of this watermark resistance in the weekly. And I wouldn't short it also because it has many trendline supports. Why I left Microsoft for the end is because there could be a shorting opportunity. Remember ST. Let's look at ST again. The one that why don't I look at the forum post? Look at the ST chart. It came to trendline resistance in weekly, daily both, started to go down, and of course I had an additional confirmation from the bearish headwind. But even if that was not there, the trendline resistances in weekly, daily could let me consider a short trade in a weak fundamental stock in a weak industry. And now let's look at Microsoft. It has also come to trendline resistance in weekly, trendline resistance in daily. In this case, there is a bearish headwind that is in the daily chart. So it is matching the profile of ST trade setup that I shared. So we could consider taking a short trade in Microsoft yesterday at market close. However, this is not a weak fundamental stock. Let's look at Microsoft. This is ST Q vital score. Remember, it was negative growth stock. And if I look at Microsoft, let's look at its industry while the scorecard is being calculated. The industry may be weak. System software, it was strong earlier, but recently it is not the strongest and pace is showing deceleration. So the industry scorecard is allowing me to short a stock in this industry. But if I look at the fundamentals, still retrieving the data. Let us wait for a few seconds, hopefully seconds, not minutes. Let's see. In fact, I could use Q Edge also because Microsoft is part of S&P 1500. When I looked up the system software industry, it also retrieved all the stocks for the industry, and Microsoft is here. MSFT, great valuation. ST also had great valuation. ST was the stock I shared as a shorting candidate, but unlike ST, here we have earnings growth. So Microsoft is not weak in any way, neither in terms of valuation nor in terms of earnings growth. And even revenue growth is positive, not negative for last 3 quarters and even 1 year. So the fundamental score is not allowing me to short Microsoft, though technicals are similar to ST. And this is a distinguishing factor probably from pure technical trading. I am going to buy only if fundamental industry and technicals are aligned, and also short only if all of them are aligned. And when I completed the 360 degrees analysis, I am not going to suggest or take short trade on Microsoft, but I would be okay to consider shorting ST. In any case, none of the FANG stocks are giving short setup technically other than Microsoft. Microsoft is giving a short setup technically, but when I complete the 360 degrees analysis, I am not going to short Microsoft, very strong company. Mega caps outperformed the market over last 2 days, but none of them have a proper buy setup. And the non-mega caps underperformed. If I look at IWM again, it underperformed. The relative performance tilted down, and in the weekly chart thrust jump, they were both hitting the red dots. Now they tilted down. So this may be a time to start to look for a pullback. There is some indication that Russell 2000 may pull back, but again, unless the major market ETFs, futures and composites break the trend line supports, I'm not going to look for many short trades. Going to be very cautious on short trades, and I have some long positions. I am not very keen to add to that as well. When that is the case and it is year end, probably it is time to stop today's session here. I'm not going to look for many trades now. I may consider taking some day trades, but I'm not going to take. I'm not a day trader actually, so I may or may not take day trades. But I'm not going to open many swing trades now. Because of that, I'm not going to share many trades also on the forum. Therefore, it is time to end today's session here. Thanks a lot for attending. I look forward to seeing you in our next session. Not sure if I'll have the weekend session during the end of the year, beginning of next year. If I don't have the weekend session, our next session will be next Wednesday. And if I have the weekend session, I'll mention about the date and time on my Twitter page as usual. Thanks a lot once again. Keep safe, trade profitably, and wish you a very happy new year. Thank you.